Hello, this is Brandon Christy, President of Retirement Benefits Institute. Today we're going to discuss required minimum distributions. Well, when you retire, you have to shift your thinking. No longer are you working to save money. Instead, you're going to enter a phase of spending. Part of that spending will come from your thrift savings plan, your TSP withdrawals. It can be frightening and difficult to transition into the withdrawal stage. Two of the most common concerns that we hear are, will I have enough money when I retire, or will my money last? As a result, some federal employees decide to work longer. In some cases, they will work until age 70 and a half or longer. However, the Internal Revenue Code says that federal retirees are required to receive a portion of their TSP in the form of a required minimum distribution effective the calendar year when they become age 70 and a half and separate from the federal government. Today I want to discuss the different ways in which that will work. Now, for you that are still employed at 70 and a half, hear this: you are not required to take the required minimum distribution from your employer-sponsored program where you are actively employed. Let me draw a couple of scenarios so that you understand. One, you're 72 years old, working for the federal government, and you think you might have to take that required minimum distribution from the TSP. You do not. You can leave that in there, and you won't be required to start that required minimum distribution until the year after you actually separate from the federal service. At that point, you'll have to begin those draws. Now, let's assume that you have another 401k from a previous employer. In that situation, that previous 401k, you're no longer employed with that company. You do have to take the required minimum distribution from that account. This only applies to the one that you are currently working for. Your spouse, if they are 70 and a half and not employed but have 401k or IRA, they have to take the required minimum distribution. The only exception to this rule in this context is if you're still employed after the age of 70 and a half. Now, you will still have to start that withdrawal and make it happen every year. Don't forget to take your required minimum distribution later in life, because if you do, if you forget or you fail to take your required minimum distribution, the penalty will be 50% of what you should have taken, and yet you will owe tax on the whole distribution you should have taken. So it's a terrible hit if you do not take that required minimum distribution. Also, lastly, when you take a required minimum distribution, if you have money in a TSP and an IRA, you can't take money from the IRA to solve the need for the RMD coming from a TSP. You have to take what's appropriate from the TSP and what's appropriate from your IRAs. They have to come out from each one separately. Understand that. You can't commingle. You have to keep them separately. If you roll your TSP to an IRA or your IRA to TSP, then you'll have one account and that will work. But otherwise, you have to keep them apart. So I hope this helps. Required minimum distributions. If you're still working after 70 and a half, know your rules. Don't take what you don't need. Also, if you are over 70 and a half, you have IRA, you have to take the money then. Understand all the elements that affect you so that you can have a successful retirement. Now, if I lost you, if you need some more information, call us, 877-864-1145, and we have analysts that are available to discuss your situation as a federal employee. We can help build a federal benefits analysis. You can click the Get Support button below and get started building your first pieces of what you need, which is a financial plan to successfully retirement. It starts with your federal benefits, understanding them, and knowing what's coming down the road. We hope you'll give us a call and we'll talk to you soon.